Now, first of all, when you pass the journal entries, identify which of the transactions have occurred and for which you have to pass these journal entries, and which accounts are to be debited and which ones or which ledgers are to be credited. Okay. Now, this first amount that we calculated, amount payable, this is the total payable, no doubt about it, but we need to split it between how much is paid for firm applications and how much is paid or balance that is to be payable. Okay, right? Basically, this is the total of these two, isn't it? Amount payable, this one is the total of these two. So, we need to pass actual entries for these amounts actually, right? So, the first entry we will pass is for the firm applications which have been made by these underwriters. So, what are they saying? The underwriters have paid 2.5 rupees for the firm applications which they have made. So, this money is already paid to the company. Okay, the remaining will be paid later, but right now this money is already paid to the company. So, we are going to pass a bank transaction, right? 2.5 rupees has been paid as share application money, right? So, whenever we have share application money, how do we calculate it? Let's keep this aligned. Okay, so as a journal entry, we need to find an account to be debited and an account to be credited. So when, now we are from the point of view of the company, when the underwriters purchase or apply for our firm applications or firm underwriting shares, they will pay us, right? We will receive. So the bank becomes the receiver. Is this clear? So, bank will be debited, bank account debit. How much is the amount now? Let's see. First, we will identify which account to credit as well. 2, we have received what now? In the form of share application money, isn't it? Share application account. This is just a temporary account which will be later transferred to the share capital account. Okay, but right now what have we received? What is the income? It is share application account, right? And we have received it in the bank. So the bank is the receiver and we debit the bank. Is that followed? Now how much is the amount? 1,25,000 plus 125 plus 125. That means all the three peoples or three underwriters, money has come in because they have applied for the firm applications. Correct? So, this total comes to 3,75,000. Alright, and credit also 3,75,000. Is that fine? Let's write a short narration. What exactly this is? So, this is application money. Application money which has been received not on all the shares, like the balance we have not yet received, this balance payable, but only for application, firm applications, these underwriters have already paid the application money, right? So, received on firm applications for how many shares? Each one took 50,000 shares each, right? 50,000 shares each at the rate of rupees 2.5 from all three underwriters. It's up to you whether you want to write the name of each underwriter. You can just say from all three underwriters. So, all three of them, they said they want to take 50,000 shares each as firm underwriting, like compulsory, they will take it definitely, and they paid 2.5 rupees for each one of those, correct. So, total they paid is 375,000. Alright. So, this is our first journal entry. Of course, we do not have dates as such for each one, but we will just pass the entries based on whatever transactions are given to us. Okay. Now we also have some balance which is payable by each of them. Okay. So they are like our debtors now. They have to pay us. Okay. Meaning Anand, Vijay and Ashok are yet to pay us 1 lakh, 1 lakh and 3,38,500. So they are our debtors. This balance has to be paid by the underwriters to us, the company. So whenever we have debtors, remember that debtors are to be debited. Debtors are always a debit balance, right? We know that, correct? So we have Anand. Let's debit them because they are debtors and they are supposed to pay us some money. Vijay's account and then Ashok's account. Okay, all of the three. Let's see how much are they supposed to pay us. Debit all three. And amounts to be paid by each one. 1 lakh, 1 lakh, 3 lakh 38,500. Meaning still payable. This is how much as debtors they are going to pay us. Debtors doesn't always mean customers, meaning those are trade debtors, right? That is the customers. But here these are debtors that are yet to pay us the money. Okay. Now where do we transfer this? This has to be transferred also to the equity share capital account, meaning this is the amount that we will receive and it will go to our share capital. So what we will do is a combined entry. What we have credited over here, we will debit it over here and the whole thing we will transfer to the share capital account. Okay. So share application account also, that is the firm underwriting amount. This amount that was paid by the underwriters, this also we are transferring to equity share capital account. So what is the logic? Basically, these first three are the amounts that are yet to come in as share capital, right? We are raising capital. So Anand, Vijay and Ashok will pay this money. That's why we have written their names because they're still debtors. And share application money is already received. It's there in our bank account. But we need to transfer that amount to the share capital, isn't it? Because our share capital has increased because we received application money, correct? So increase that share capital and show the full amount here. Total of all of these four comes to 9,13,500. Okay, so share application. So what are we saying? Being allotment, meaning that much money has come in. It has been allotted to these people of shares to Anand, or I'll just say to the underwriters, and share application money, that is the second part. What we have done with the share application money is being share allotment of shares and share application money credited to the share capital account. Okay, so we transferred all the money to the share capital account. Like we are showing that this is how much we have raised as share capital from this issue. Okay, this is how much the underwriters are supposed to pay us. Is this clear? The next transaction is underwriting commission. Just go by the order of this statement and you will see one transaction after another. So underwriting commission is something the company pays to the underwriters, right? Which means it is debit. It is a expense and it will be debited. It is going out, right? The company is paying it. So underwriting commission is an expense and it will be debited. So debit. How much is the total underwriting commission? Again, 125 plus 125 in plus 125, you get 3,75,000. Okay, this is the underwriting commission. Fine. And it is payable to whom? Who are the people who are going to receive it? Now for underwriting commission, these three underwriters become our creditors because we are supposed to pay them. So we have to credit their accounts. Okay. So we are supposed to pay Anand. How much? 125. Credit it. We are supposed to pay Vijay also 125. Sorry. Right, and we are also supposed to pay Ashok 125. Correct? So how much the company is supposed to now pay each one of the underwriters in the form of the commission. Is this clear? So narration will be being amount payable to the underwriters, or I'll just write being underwriting commission payable to the underwriters at the rate of, commission percentage was 2.5%, right, at the rate of 2.5%. Narration is purely a personal choice as to what you would like to include in it, what type of details. It's written so that you understand at a later date when you go back and check your accounts and the journal entries, you understand what that transaction is by reading the narration. So it's completely up to you, from accountant to accountant it differs as to how you would like to narrate it for your own understanding and reference later. Okay, and then now let's see how much of these amounts are payable to each one. Amount paid to and due to, okay, that is paid to and received from underwriters. So company has paid to underwriters this much to Anand and Vijay. Let's write that first. So paid. Who received? Anand and Vijay received, right? So Anand account will be debited. Vijay account will be debited. They are the receivers. Going back to all our basic types of accounts and the rules related to it, Anand and Vijay in this case are receivers because the money has been paid to them. So how is it paid? Through a bank transaction. So we just write to bank. How much is paid? Ashok got 25. Vijay also got 25. So total 50,000 went out of the bank. Okay. So I will write here being balance amount paid to Anand and Vijay after adjusting commission. So whatever was left paid to these two, right? So both of them get 25,000 each. And same way, only one person, that is our Ashok here, he is paying to the company. So received from underwriters means what? We have received. Ashok has paid to us. He was yet to pay us. That means our bank account will get debited. Our bank account becomes the receiver here. Okay. How much are we receiving? 2,13,500, this last amount. And who is giving us this money? The giver is Ashok, right? So to Ashok also 2,13,500. Again, being balance amount, similar entry I will write here. Being balance amount, this time it is received from only one person, that is Ashok, after adjusting the commission. So this is how much he is paying us after all the adjustments have been done as to who will pay whom. okay, and this is how much we have paid to the other two underwriters because our commission amount was greater than what they were supposed to pay us, okay. So these were the journal entries. This is a complete full problem with both the statements as well as the journal entries to it.